Good. Okay, that's a minute. So if there's any late joiners, welcome to you, and good afternoon, everyone. I'm Steve Labar, a motor retail audit partner within BDO, and welcome everyone to this BDO Motor Retail webinar today, where we'll be providing details and results into our 2023 salary survey. This is actually the 13th year of us carrying out this report, and we see it as an essential report for the sector, especially where staff costs are the largest costs within the business, and at a time where there's the continued war for talent and staff retention, together with, as we know, the economic and trading pressures that are all currently in play. If you flick over the slide, I'm delighted today that we have a number of speakers providing their insight into the report and around general employment and stuff. We'll start off with James Evans, who's going to provide an overview of the report and findings from the report. We'll then move on to Jack Treacher, who will give some employment tax and incentives updates that groups can consider and think about. And unfortunately, Linda Ennis from Ennis & Co is actually ill today. We have a more than capable stand-in with Al Clark from Ennis & Co, who will be providing some thoughts on the skills gap, which is prevalent not only in the motor sector, but in the wider economy within the UK. And then to finalise, to finish off, Chris Bond will be then wrapping up the session with some Q&A. So I can encourage you all, if you do have questions during the presentation, please add them to the Q&A function within this Zoom call. Without further ado, I will now hand over to James, who can take us through the overview for the results from the report.
Thank you very much, Steve. So this is the 13th annual salary survey that we have done. Thrilled to say that we've had more participation than we've had previously. We've had over 30 groups take part, and those 30 groups cover around 25,000 employees across the motor retail space. So not a small number of groups, and certainly a lot of people involved. And obviously, thank you very much to all those who have taken part. For obvious reasons, we literally couldn't do it without you. So what did we find? If we move across the next slide, please, Jamie. So I guess the headline figure, or the figure that we're putting out there, is we're seeing an average increase of around 7%. Now, I will stress, and I'll come back to this in a moment, this excludes management pay for certain reasons. But overall, we're seeing around a 7% increase. And actually, we have a cut-off date for the data of around sort of March, April time. And at that point, annual average private sector wage growth was also, I think, being reported around that sort of same 7% mark. So I guess from that perspective, the industry has been aligned with the rest of the economy, certainly within the private sector. I guess just very quickly, for those who aren't aware of the details, so we gather data on about 29 positions, same positions as we used over the last few years. And we don't make any effort to weight these, so appreciate that there might only be one finance director, but there may be any number of salespeople, service technicians, and the like. So we don't make any effort to weight that. It's, weighted as one role out of the 29. Of the 29, there's about 6 or 7 management positions within that. So whilst we're saying a 7%, increase, we're not necessarily expecting that to mean that wages across the board, your total wage bill of however many million, would increase by 7% per se. So in terms of looking across the departments, as you can see, we have vehicles, parts, service, administration, and I will talk about the management roles as well. You can see the split there. So certainly parts, service, and administration were slightly ahead of that 7% figure, at 8, 9, and 8% respectively. I'll mention service technicians in a moment. and as you can see, service, being slightly ahead of the others. There wasn't quite as big an increase on the vehicle side. I don't think this was necessarily a big surprise. Certainly in the results we had for the 2022 survey, we've seen a very big increase in vehicles wages, which we'd sort of predominantly sort of taken to be as a result of the very strong results across the sector in sort of back end of 2021 and into 2022. So perhaps the fact that these didn't increase by quite so much was possibly a reflection of the fact that there had been a very strong increase previously. So they're coming from quite a high base there. I've mentioned that we exclude the management results from that 7% increase. And that is partly because those roles can vary quite greatly from organisation to organisation. That doesn't mean that they are no less, important to gather data on at all. However, the CEO or the FD of a large motor retail group with, hundreds of millions of revenue, potentially over $1 billion revenue, it can be quite a different role to one looking after a single site dealership. And, thankfully, the 30 plus groups that took part all vary in sizes and are from different parts of the UK. The data can certainly be skewed by the sort of definition of those roles. Obviously, the larger groups might have a bigger HR department, IT department. Owner managed businesses might have an MD that might take out a sort of a one-off amount in a given year, and obviously this does have a greater impact on the data we get. So what we saw was a fall of around 13% across those management positions. However, the management positions, a bit similarly to the vehicle data, had one of the biggest increases last year. So the 7% doesn't include the management positions, but that said, we've always felt that the sort of department by department data was probably more helpful anyway, and certainly where a lot more of the considerations around pay are likely to be. I mentioned service technicians. I'll come on to a little bit more around the questionnaire that we sent to participants as well on a few different areas. One area we did ask about was where they felt this need for getting more staff, and where they're having, well, I guess by definition, where they're having the greatest challenge in recruitment. And probably no surprise to anyone on the webinar that service technician was pretty universally the first role mentioned. And in terms of what we saw in the salary data, so we have 3 different service technician roles. We have a sort of a new technician with no more than a year's experience, slightly more experienced technician at maybe around 2 to 3 years, and then 3 years plus. The average increase across those 3 technician roles was around 13%. And actually the increase for brand new technicians was more like 15 to 17%. So that clearly would have had an impact on the headline sort of 9% service figure there, and really is a reflection of not so much necessarily the macroeconomic environment in terms of inflation, but really just that fight to get the best technicians working in your dealerships. I guess just to touch upon some of the other data we got. So in terms of holiday and benefits, there was not a lot of change here. So on average, we're seeing sort of a 42-hour week, 24 days of leave. Just over half the roles came with a car benefit. About 85% of roles more widely had other benefits, and actually the level of pension was up over 90% for the first time, which I think is really as a result of auto enrolment from a few years back, just bedding in more. Next slide, please, Jamie. So, as I mentioned, we had asked participants to also answer a few questions in the survey. So one of the main questions we wanted to ask is what staff levels were and how many employees had joined or left in the last year to get a better idea as to what staff turnover was looking like. And where we got to was around 31%, clearly higher than what the wider economy is likely seeing. And really, even though everyone's probably aware that the industry has often seen higher levels of staff turnover, when you think that across the 25,000 employees over the participants, that about 7 to 8,000 have left and been recruited over that period. Certainly across the participants, we weren't seeing any real increase or fall in the total number of employees. It really does make you think about the costs involved, whether it be recruitment or or training needs. So we also asked questions around pay practices. So obviously there's been a somewhat well publicised cost of living crisis with the high levels of inflation and the somewhat sluggish economic growth across the UK. And we asked a question around whether employers had changed any of their pay practices. I think, as we can see on the slide there, there were a number of different ways that many groups had approached this. The most common of which was splitting pay rises into two parts, so moving away from an annual pay review to introducing an interim pay increase as well. A number of groups were taking some bonuses and actually moving them into basic salaries. Some groups were having greater increases for those on lower pay. And there was also one-off cost of living support payments paid by a number of groups as well. And I know that there's certain areas around that Jack will be talking about shortly. I think what certainly helped is with the strong profitability across the sector recently, that's probably helped groups be a little more agile in their approach to pay and ensuring that they're keeping pace with employee needs and the wider economy. But it still remains important to remember that it's not necessarily all about pay. There's always talk about what millennials are thinking these days, and there's certainly other ways that employers can be kept happy, whether that be more flexible working opportunities or other non-cash measures, which again I know that Jack and Al will touch upon areas like that shortly. As I said, that past profitability has certainly helped the sector, I think, be a bit more agile when they approach pay. Clearly there's challenges and potentially opportunities still to come. We talk about greater electrification and what that means for the roles that are required going forward. Obviously, there's been a lot of news and noise in the last 24 hours about that 2030 target for stopping new ICE sales. Agencies come in the last year as well. We yet to see much change in terms of pay practices for that, but who's to say that might not have an impact going forwards? And across the industry with higher sort of levels of interest rates, clearly costs are still going up. The economy is still kind of in first gear, and we know that profit margins are being squeezed. So clearly that continues to make it very important for people to be thinking ahead and having a think about these challenges, keeping employees happy, and what employers will be doing going forward. As Steve said at the top, clearly staff costs are a very huge part of the cost base for motor retailers, and as such, that sort of attention is absolutely required. I think that's enough from me right now, so I believe I'm passing over to Jack.
Thanks, James. Hi, everyone. So, yeah, just by way of introduction, firstly, I'm an employment tax specialist here at BDO. And I've got two things to talk about today. So I think firstly, quite a popular topic of employee retention and reward. And then secondly, looking at some particular hot topics and maybe diving into a bit of HMRC activity in the motor industry. So we can have the next slide, please. Employee retention and reward. So I think the context here, and James set the scene brilliantly, really. So with the cost of living crisis, that has an impact on employees, but of course also employers. We've got stubbornly high inflation and continually high interest rates. So employee pay from this aspect is clearly impacted, disposable income perhaps down, and the average employee turnover that James touched on is 31%. So while we've got reward issues, we've also got retention struggles where we can sort of solve them, if you like, bring a solution to that, then could that actually reduce costs long term? I think here, when we've looked at what has been happening as a result of the cost of living crisis, I know many of you have responded, but each of those solutions have generally been to increase pay, bring in bonuses to pay, or increase bonuses. And of course, that is effective. Increasing gross pay will increase net pay, but there's a point there around all of that will also attract increased tax and national insurance costs. And so actually what I'd like to look at today is, with that context in mind, there are other options potentially for employers to make sure, particularly for the motor industry, that you're utilising tax efficient options that maybe are lesser known. We sort of refer to them as hidden gems more recently. So what I thought I'd do, I'll touch on some of these, and I've ordered it because I can see from the response to the survey that most respondents here have a salary sacrifice pension, for example. But other ones that I'd like to touch on. So I think firstly would be cycle to work. Now, of course, this is only relevant for employees that would like a bike, but in the same way that salary sacrifice works for pension, it also works for buying a bike. So the government want to increase people's health and fitness, so they've introduced incentives where an employee can purchase a bike brand new from almost all retailers in the UK, and that can be used as a gross deduction from pay, so it can benefit from tax and NIC savings. So for a high rate taxpayer, you save 40% tax and 2% NIC. So straight away you'd have a 42% discount on a brand new bike. With most of these schemes in the UK, they're really good because you can also benefit from a bulk discount. So as an employer, if you sign up, generally they'd also add 3 or 4%. So your discount for employees now up to 46%. And now, because it's done by salary sacrifice, that then can be spread across 12, 24 or 36 months. So that's just something that I've seen, that employers in the UK are generally increasing the option here to say, while we can increase pay and bonuses, what we can also do is bring something in that won't cost us anything else, but will reduce the cost for you in your personal life, essentially, without attracting additional tax and national insurance. And so that's the sort of theme here. The other one is, now I think this is quite relevant for the cost of living crisis, so employee vouchers. So I noticed that I think a few respondents said that there was temporary introductions of increased pay during the 6 months of the winter when bills were high, etc. Now there's an exemption called a trivial benefits exemption, and many employers don't use this across the UK, and essentially there's an exemption for vouchers of up to £50 to be provided to employees tax-free. If you provide vouchers for reward or recognition, then you have to pay tax and national insurance on it one way or another. However, a trivial benefits exemption voucher is when you give a voucher that isn't in for reward or recognition. So that could be as an employer due to the economic climate, we like to support employees. As a result, here's a voucher. So again, that can be a tax-free voucher there. Discount portals, I'm sure many have come across this, and they're quite common on TV and internet adverts, but essentially you can access a discount portal as an employer, and then that would usually give the employees between 5 and 10% discount on things such as holidays, vehicles, technology, personal items, groceries, etc. So you sort of think, if you add in an employee voucher and you give a discount portal, then suddenly your money for the same amount is going further. And then there's other ones there, so workplace meals, long service awards, and there's increased amounts of eye test vouchers for glasses, things like this. And I think in isolation, the point here is that I'm not claiming that any of these in isolation are necessarily groundbreaking, but what we're looking at here is, as we have this cost of living crisis, and as James said, our sort of millennial viewpoint increasingly, it's looking at the total reward proposition versus the movements in net pay. So actually, of course, it's great and encouraging for employees to receive increases, but at the same time, that value base of my total reward package is made up of many different elements, of which many are tax efficient. And actually, for you as employers, perhaps wouldn't cost you any more money to deliver quite a lot of value. So I think that's just something I really want to touch on for those that might be looking at how can we support employees further, but perhaps not with full cost addition. So yeah, that's employee retention and reward. So I think, Jamie, if you can move to the next slide. So a couple of hot topics as well on employment taxes. So I think the first one, it's quite recent, so it's quite hot off the press. So as of the last few weeks, we've been made aware that HMRC have launched a national minimum wage compliance campaign, particularly in the motor industry. So what this looks like essentially is that many motor industry employers are being sent a nudge letter, we're calling it. And in the nudge letter, HMRC is saying, we recommend a review is being carried out in relation to your national minimum wage compliance, and we would like confirmation that you are paying this correctly. And within there, they give a tick box essentially for different areas of national minimum wage. I think stepping back, national minimum wage, as soon as I say that, I'm sure you think about the rate, it's £10.42 per hour. And, we've got many employees above that and et cetera, and that is great. And we're not looking at employers looking to pay below national minimum wage. Actually, here it's more about the rules in which national wage pay is calculated. And so it goes beyond the pay rate. So firstly, it looks at working time. So if we have employees on shift before or after or traveling, is there any element of paid time that could affect their hourly rate? Another one is payment. So we might have many elements of payments, but actually not all of those can count for national minimum wage purposes. They might be different. So actually when HMRC look at this and they're requesting it, it might be just looking at salary that counts and anything else might not. Then we have deductions as well. So whilst deductions that may be made from employees' pay might be lawful and within your rights to do so, that might reduce their pay for national minimum wage purposes. And so it might be, I don't know, advances, for example, loans, salary sacrifices, as I mentioned before, can also reduce pay for national wage purposes. And so whilst £10.42 per hour might be on the lower pay end for many of you and your employees, HMRC's population is generally anyone paid up to 33k could be at risk of being paid below the national minimum wage. The consequence essentially to dive in would be that HMRC are quite focused on this, and so at the moment as it stands, if they do reach out and find any national wage breaches, the current penalties, if you like, which is the first question I'm going to get, is 200% of the payback employees, an additional 200% penalty, and depend on the level of breach, there's also unfortunate naming and shaming list. And you may have seen this in the press. Many, particularly retailers, recently have been highlighted, well known to the public, that they've actually had a breach, even though their pay rates are clearly above national minimum wage. So it's just to highlight that. And I think essentially with this in mind, there's never been a better time to consider your position in relation to national minimum wage. And I think my first comment would be it's beyond what's going through the payroll. It's above that essentially. Now the other hot topic, just briefly, was P11D amendment changes. Now I know many of you have employees that have benefits that James touched on, and so HMRC, without warning this year, so they told us on the day of, any amendments to P11D returns, so P11D returns being where you report your employee benefits, they no longer accept paper forms. It's only electronic, and not only is it only electronic, it is not able to be done by any external software. It can only be done manually by HMRC's website per employee per tax year. So I'm aware of some practices where late information comes in for P11Ds. So it's just one to note that that would be a manual process for now, but it might change. So yeah, that was hot topics really, national wage compliance and P&MD amendment changes. That is all from me. So I believe now it's time to pass on to Al.
Thank you very much, Jack. I was just mulling on how the accounts department took that when the P11D information came through and they had to do it all manually. Oof, that was not a day to be in the office. Good afternoon, and thank you very much to the team at BDO for the second year of inviting Ennis & Co to be involved in the salary report. It's great to work with you. And thank you for the invitation to join this webinar and talk about the particular aspect of skills gap. Now, we as an organisation provide search, which, without going off piste, within the headhunting or recruitment sector. What it means is we are commissioned by our clients to discreetly find people to fill positions. So we don't advertise, we have to kind of use our research skills and analysis to go and find candidates for roles. And we're typically working at the director and above role, but sometimes senior manager role. And what that means is we have a lot of interesting conversations with people who are managing organizations. And in the more than 12 years that we've been in business as Ennis & Co, one of the recurring themes is the gap in skills. And so 2 years ago, we set out, having heard this time and again from various leaders, oh, I can't find this skill, I can't find that skill, to try and share some learnings of common problems in the industry. And in doing so, we spoke to something like 45 leaders across from the full spectrum of the life cycle of the vehicle. So from research and development, supply chain, manufacturer, retailer, then through to suppliers in after sales. So we got a very clear view of where the gaps were across the sector. And as you might expect, there were a lot of commonalities. So no surprise that AI, artificial intelligence, is a skill that is missing. Customer experience is something that's missing right across, even from R&D through until after sales. People need to have the skills in their business that is able to keep their customer engaged. And that's a core skill that's needed across the industry. And of course, electrification was another element. Now, in terms of our research, we then conducted to find data because somebody with an opinion is just an opinion without data. And so we wanted to find some numbers. And we came across a number of reports. And the data you see on the screen there said that in 2020, there was something like 1 million skilled people short in the industry. Now, that's globally, but the significance of it is that it's doubling by 2025 to 2.3 million and doubling again by 2030. So the problem is not going away, it's getting worse. And what it means is that the competition, particularly in this sector of retail, is your competitor, of course, is the retailer across town, but your competitor for those skills could also be the hotel down the road, interested in that customer service skill, or could be another industry nearby if they're looking for technicians. So it is a global issue, it's real, and what it behoves is finding those skills and tactics that enable you to attract the skill. Jamie, next slide, please. So why does it matter if you're sitting in a retail business as you are today, looking with all the news that's going on? There's buying and selling going on of retailers. There's Rishi Sunak, is he, isn't he, 2030. There's a whole lot of stuff going on. So we're living in the middle of change. We've got cost of living crisis. We've got interest rates going up. We've got enough to do without thinking about what skills we need in 2 to 3 years' time. Well, the reality is that whilst electrification is coming, whether it's 2030 or 2035, there are electrification skills that are going to be needed in your business. And those include the future skills of e-commerce, data science, the electrification, the understanding of engagement with customers. So those are what we might call future skills, but you still need them now. But sometimes in this conversation about skills, the legacy skills are forgotten. And whilst the arrival of electric vehicles and electrification means we are moving to that future, there are still millions, more than 30 million, 32 million internal combustion engine vehicles. And even if you do the maths, there are another 15 to 20 years, albeit dwindling, when those vehicles provide a service opportunity and an after-sales facility. So there are people in school today who potentially could spend their career dealing with internal combustion engine technology. And that sometimes is missed in the conversation, because those skills are going to be needed somewhere, maybe not in a franchise retail environment, but maybe in a specialist independent environment, but all of those skills are still going to be needed. So considered when looking at the skills you're going to need moving forward. Now, why does it matter to your business? Well, it means that if you don't have sufficient skills to do it at the moment, you are risking burnout of the team that is left behind. It's all very well if there's, you know, a desk empty next to you and you're covering it for a couple of weeks, somebody's on holiday, somebody's sick. But if that desk is permanently empty, it means that the rest of the team is working harder and risking burnout. And if they're your core team, then you risk losing them completely. So there's a challenge here that's just not an HR fix it, find some people to put in the desk. It's a fundamental requirement, as we discovered in our conversation at senior level. Deal with this at a senior board, at an executive level, where skills becomes something that's talked about and discussed in those weekly and strategy meetings, to say, where are we with the skills? Where are we with those filling in those parts that we need within the organization? And like any business activity, it needs a plan. It needs a structured approach to consult with the business, see where the gaps are, and then put a plan together. On the middle of this slide here, we produced a roadmap, and it's available. You can look at our website and request a copy. But there were 7 key areas there that we identified in discussion with the people we spoke with to solve your skills gap. Of course, you can buy in new talent, but that essentially is just adding to your cost. You need to think about living the brand, and more of us in business are seeing the importance of that in terms of, it's one thing to have an image on social media or in advertising. It's got to be what you see when you walk in the showroom as well, or it's got to be the same when you have the electronic communication. So if you say we're lively, upfront and responsive, then that response needs to happen online. It can't be responded the next day or the day after or forgotten. Of course, there's upskilling the existing team. There's engaging with education, which is often the response that most organizations say when they say, well, how are we addressing the skills gap? We've got an apprenticeship program where you go into schools, we talk to people. Fine, but that's part of the problem. That doesn't solve all the problems. Smart partnerships with other organizations is a good way of working, because you'll tend to find in your supply chain, there may be skills that are needed both sides. If you have a supplier who comes into your retailer, you may find there are some overlapping skills, and there are some smart ways of things that could be done. And then we start thinking more widely and perhaps more effectively about the people we don't normally access and bring into the business. Maybe people with, in some way, are involved more in that diverse, equity and inclusive communities. So perhaps somebody with disabilities, maybe somebody who's been out of work a long time. There are a whole pool of people that are ready and able, but invisible. And perhaps we dismiss as a sector by thinking, well, they don't have 10 years working in the industry, they've never serviced a car, they've never dealt with a sale, therefore we won't look at them. But with some smarter thinking, that unlocks a whole new pool of talent. And then, of course, there's a balance, a commercial balance to be found here. You can't spend your entire life and money training, developing and doing it. You have to make money. So there are a number of things to consider when you're putting that plan together. Next slide, please, Jamie. What we identified in looking at the solutions was we thought about this problem in 3 ways. There are the people who are starting their career, and we call them career exploration. So that's typically people who are up to 25 years old. That could include apprenticeships. And that section of your workforce, you're about building the pipeline. And it tends to be, as I said, where a lot of the energy, a lot of the resources goes, bring in the young people, work on this. Great. It's part of the strategy, but it's not all of the strategy because they are part of the workforce. The bigger area of your workforce are what we call those in established careers. These are the people, the women and men who are the backbone of your business, who've worked in the organization. They've been through stuff. They understand how to manage crises. They're used to dealing with customers, with commercial challenges. But they need upskilling. They need motivating. We all get stale. We all need new challenges. And rather than let them wander off to a new sector, that can be a focus of your development in terms of giving those people new opportunities, particularly with the new future skills that are coming along. People want to learn, and when motivated and encouraged in the right way, they're keen to do it. And then career choice, the older part of your workforce, people between 45 and 70. Gosh, 45, isn't that old? Well, actually, people approaching 50 and beyond, many have the choice, or many have the opportunity to think about how they might work. Some of them have taken early retirement. They're still potentially interested in work because of the cost of living crisis. Maybe they don't need a salary because they may have retired, but they might be interested in coming back and doing 2 or 3 days a week. They might be interested in working over weekends because they see people during the week. They're not interested in a big salary, but they might be interested in a healthcare package or some other way. So thinking about people who are older and bringing them back into the workforce, A, brings a balance to the workforce and a better balance and demographic, but B, can bring you flexibility. As an organization, that you don't maybe need, somebody in a 5-day, 6-day contract. And then diversity and inclusion, which I touched on briefly, is a really rich talent pool and opportunity for your organization to reach into and find different ways. But there are some practical things that you can do. And when we all think about how do I engage and attract and work through a DE&I strategy, well, it's some really simple things, and we may come across it on the Q&A, but think about job descriptions. If your job description says, seeking a technician must have 10 years training on Audi or Volkswagen, you've immediately shrunk the pool down essentially to your competitors and 1 or 2 other people. Whereas if you said, must have technical aptitude and technical experience, 5 to 10 years, then bring that person in, talk to them, understand. Sure, there's an investment in a training program, but there's a wider pool of people to talk to. Could be men, women, could be people from different backgrounds that would then be attracted to do so. And having those perhaps more flexible work arrangements. You might be surprised by the hours that some people might be interested to work. They might work a split shift. They might be interested in working later into the evening if that gives them the flexibility to work because of their circumstances or their place in life at the moment. And then the final point really is avoiding long checklists on your job descriptions. I don't know about you, but I don't think there's a role that I've ever been for or ever seen anybody go for who's a 10 out of 10. None of us is 10 out of 10, meets all the requirements on the job description. But if you're less prescriptive and keep a limited number of attributes that you're looking for, that will also bring in a wider pool. Final slide, please, Jamie. So what we are seeing, and our business has moved and developed as we've moved from being a search organization, which we continue to be, but we are also looking, as the business and the market is responding, they're needing more insight. When we're talking to clients, they want to understand the way the market is working. Sure, they want a list of candidates, but they want to understand what's out there. They want to see perhaps more widely, what other sectors around automotive and mobility have got talent available, geographically where those people are, and starting to plan strategically how maybe in 2-3 years' time, the team that you have at the moment, you might realize you need to be more in one particular area of development. So by looking at the mapping and the intelligence and the thinking, you're starting to see, right, where that talent pool could be that you will then perhaps engage and start building a dialogue with that will then set you up and enable you to reach and bring your strategy into reality and give you the skills you need. So there are things you want to be thinking about then. Your growth plan, what is it that you think you're going to do? What are the skills that you're going to need? What does that mean in terms of internal development, those people, early stage or established career, thinking about external resourcing, because frankly, you might not need a skill for life. Maybe you need somebody for a year or 6 months or 18 months to help you get through it. bring in an external support to do that rather than taking overhead. Think about the geography. Do your people absolutely need to be sitting in the business day after day, or could you do it in some way remote or hybrid? And think very clearly and focused about the skills that you might require. Apologies, I've taken over my time, so at that point I'll pause and thank you for your indulgence. But any questions, happy to take them.
Al, thank you very much for your presentation and for the support of Ennis & Co to our process this year. We've got one question on the chat, which is from Alan McIntosh. I think this is for you, Jack, around how do we make a voucher classed a support voucher and therefore non-taxable?
Great, thanks, Chris. So I think generally the voucher point, obviously looking at the employee retention piece, there's a number of criteria in the legislation. The main point here is about in reward or recognition. If you're saying to someone, thank you, well done, good job, here's something for that, that's generally considered earnings and therefore taxable. If it's moving outside of that and it's saying out of employer choice, that's when you can start to consider it being non-taxable. Happy to address this one more specifically with follow-up, because the other factor is there's other criteria that will depend on the particular case, but generally it's the recognition or not, but happy to follow up otherwise.
Okay, thanks, Jack. No doubt you'll probably get in touch with Alan just to try and make that a little bit more clearer. Al, could I ask a question of you? One of the future skills that you talked about was AI. How do you think AI will impact on the industry and particularly pay and skills in the future?
Yeah, interesting, isn't it? Because the hot stuff, the hot skills are inevitably in demand everywhere. And so you end up having to pay more for them. And I thought it was interesting in your introduction there, James, when you were looking at the differences between, I think you were 6 and 8% and somewhere above at 9%. So the hot stuff inevitably always attracts more. But the skill of AI, and it's one of those buzzwords, isn't it? That essentially it's understanding technology and how to apply it to an organization. So the skill is very transferable. And we saw in our research, starting at R&D and working right way through to after sales, people wrote artificial intelligence. And when we drilled down into what that meant, essentially what it meant was being able to apply technology to automate some of the aspects of their organization. So if you think of it in that term, rather than getting too much into ChatGPT and all those buzz things, it's about that technology. And then you think about, okay, if we were commissioned then to find somebody for a particular company, we would be very clear in defining what was needed in that company. And then we'd probably go and look, we'd look in the industry, but we'd look outside the industry as to who else was doing something similar. And I think that's where you need to apply that thinking. If you're thinking, oh, I need AI, I do. What does that actually mean? And then thinking about how that would apply in the business, how you would use it. And as I said, sometimes you may need it full time. You may just need it to sort of get you over the sort of the hump, and then you may not need that skill all the time, or you may need a lower level of that skill. So it comes back to understanding your problems, writing your problem statement first of all, being really clear, and that will then walk you towards finding the solution. Because the temptation is to write a check and bring somebody in, and if they're not the right person, just bringing them in with an AI title isn't really going to solve your problem. They could end up being a fish out of water because they can't relate to people around them, and you've got a kind of expensive resource that you're not able to really maximize because they don't gel with the way that the organization fits.
Good point. Yes. Thanks, Al. Jack, I've got another question for you, and then I've got a question for James. I think they're on the chat there. Michelle is asking around the HMRC deductions that would not don't count towards national minimum wage. Can you give a quick answer to that?
Yeah. So I think does depend. Generally, with deductions, the common ones that we would be concerned about: salary sacrifice, generally things that are for the employer or employee, sorry. Ones that perhaps would be less risk, deductions for maybe there's a misconduct, or they've had a parking fine or something, or perhaps an advance of wages, you're then deducting that subsequent months. That's okay. And it does show that there is a yes or no answer depending on the deduction. But the other point here is it then depends on the contractual evidence of that deduction. It might not be sufficient to say what it is in a payslip. It might need more. And I'd be happy to speak further. And I should have added during my section on national wage that at BDO we have hired ex-HMRC national wage officers. So previously they've carried out the inquiries, and now they're here to help. So it would be helpful to have a discussion on that further. Then yeah, please let me know. But I'll be happy to follow up, Michelle, as well.
Thanks, Jack. James, question for you. I just want to say thanks for putting all of the data together. Excellent as always. Was there any surprises for you in the data, or any things that you were expecting to see but didn't?
It's difficult to say. I think if someone had asked me before we started collating all the data what sort of headline number did I expect, I think actually that 7% mark was probably about the right ballpark. Probably no surprises in some of the things I said around service technicians and service department being a little bit higher. I think it's well publicised how difficult it's been for many groups to keep their service technicians happy and in situ. I think the vehicle department I thought might have increased a little bit more. As I said, it had increased by a lot last year, which I think has been part of the reason why it maybe didn't increase quite so much this year. You factor in sort of wider piece around squeezing margins and bits and pieces that can have an impact, especially where pay is a bit more incentivized or commission based, and the management results do tend to vary quite a bit year to year. And so I probably wouldn't have expected a 13% fall there, but as I said, I think certainly where most people's interest will lie is in the vehicles, parts, sort of admin and service department. So whilst it has an impact overall, if you're looking at the all positions added together, actually I think there are reasons why it has changed. So now I'd say if someone had asked where I thought it would be 7%, it's probably give or take what I expected, and I expect that to be a little bit lower going forward next year.
Okay, thanks, James. I think we've got a couple of other questions in the chat as well. I'll probably just take one more. Jack, I think perhaps have we had any experience of HMSC audits on furlough grants via the kind of CGRS scheme? Perhaps you could just give Alan some feedback on that.
Yeah, so yeah, at high level, yes. HMRC still have a CGRS task force. They've been set by the government to try and recover billions, essentially, of pounds of furlough. So as a result of that, they carry out audits. The problem with furlough at high level is, yes, it was generally 80%, but the guidance was updated approximately 300 times since it was introduced in March 2020 and closed in September 2021. And within those 300 updates, that did include adjustments to the calculations throughout. So as a result of that, HMRC are potentially looking at calculation technicalities. So yeah, always helpful to review your position, but perhaps Alan, happy to catch up on that and give some more insight as well.
Thanks, Jack. I think we'll then, I think that's all the questions, because we'll follow up with Alan on everything. Can I just say thank you to everyone today, so to Steve, to James, to Jack, and to Al from Ennis & Co. Thank you very much for your support again. I'm Correspond. I'm the head of motor retail at BDO. We will send out a link to the recording to everyone, as well as the salary survey, and those businesses that have participated in the survey, so the data set, they will get a set of the full report, and other people who are interested in the information will get a summary set of data to go through. So thank you very much for joining the webinar and presentation today. If you've got any further questions, please contact one of the speakers, and we look forward to seeing you soon. Thank you.